What's up, financiers? ENL Finance here, coming at you with our first series on building a diverse portfolio. In this series of videos, we'll be tackling the question, what type of portfolio do you feel fits your style of investing? By building 3 different portfolios and measuring the amount of passive income gained from dividend-paying companies, we'll be able to check and see for ourselves. Each portfolio will be targeted to different types of investors. The first portfolio will consist of the Aristocrats, as this is considered the safest paying dividend portfolio of the 3. The second will have a more balanced approach where the company continues to grow and increases their dividend at the same time. And the last will consist of maximum gain, which will consist of companies that pay high dividends that have positioned themselves in their sector to afford these high payments. But before we begin, please don't forget to smash that like button. It really helps the channel out. And if you're new, welcome to the channel where money makes money. This 11-episode series will be dedicated to each individual sector. There are 11 sectors in the stock market. They are consumer staples, financials, utilities, consumer discretionary, energy, healthcare, industrials, technology, telecom, materials, and real estate. The sector we're going to start with is the consumer staples sector. The consumer staples sector consists of companies that create products consumers are unwilling to cut from their budgets. So let's start with the Aristocrats portfolio. The company we've chosen to represent the sector of consumer staples is Procter & Gamble, ticker symbol PG. PG has had over 50 years of dividend increases and payments to investors. Having 10 shares of this company will give this portfolio a yearly income of $31.60, or a quarterly payment of $7.90. Since this is the first investment for this portfolio, the graph shows that PG covers most of the portfolio. In the next episode, we'll be adding a stock from the financial sector. As we continue to add from the different sectors, we'll be able to see and gain more data on which of the 3 portfolios are best to fit you or someone you may know. 2 other companies that could have been added to this portfolio are Coca-Cola, ticker symbol KO, and Colgate, ticker symbol CL. Having 10 shares of Coca-Cola pays a yearly dividend of $16.40, or a quarterly payment of $4.10. Having 10 shares of CL pays a yearly dividend of $17.60, or $4.40 every quarter. They both have over 50 years of paying shareholders a dividend, which makes them a reliable source for a dividend investor. The next portfolio that we'll be discussing is the balanced portfolio, which, unlike the Aristocrats portfolio, may not have over 50 years of paying shareholders, but does have a record of company growth along with steady dividend payment increments. For this particular portfolio, we've chosen Target, ticker symbol TGT, to represent the consumer staples sector. Having 10 shares of this company will give this portfolio a yearly income of $27.20, or $6.80 per quarter. Target recently reported a quarterly revenue of over $22 billion, a 21.25% increase compared to the same quarter last year. Target has seen a growth of over 3% in the past 5 years and over 14% in the last 2 years. 2 other options that could fit into this portfolio are Walmart, ticker symbol WMT, or Tyson Foods, ticker symbol TSN. Just having 10 shares of Walmart will give you $21.60 a year, or $5.40 a quarter. And with Tyson, you'll get $18 a year, or $4.50 a quarter. All of these companies fit the balanced portfolio because of their steady growth as a company and increasing of their dividend payment as the company continues to grow. The last portfolio in this series is built for maximum gain. From dividend payments, not only are we aiming for a large payday, but we want this large payment to have consistency. The company we've chosen to represent the consumer staples sector of this portfolio is PepsiCo, ticker symbol PEP. PepsiCo pays $1.02 per share, and just having 10 shares will give a yearly payment of $40.80, or $10.20 per quarter. Pepsi can provide this large dividend payment to its shareholders due to the large cash flow it is able to generate. Pepsi has revenues of over $67 billion and has a free cash flow of over $5 million. Similarly, two other high dividend pairs that could qualify into this portfolio are Clorox, ticker symbol CLX, and Costco Wholesale, ticker symbol COST. Having 10 shares of Clorox will give you a yearly payment of $44.40 or a quarterly payment of $11.10. However, with Costco, not only would you have received $28 in yearly payments or $7 per quarter, but this year you would have received a special dividend payment of $10 per share. A special dividend is a non-recurring distribution of company assets, usually in the form of cash to shareholders. The last time this company paid a special dividend was in 2017 for $7 and 2015 for $5. Most of the companies in this portfolio need to maintain a large cash flow to keep these high payments. In the next episodes, we'll continue to focus on diversifying each portfolio based on the type of investing approach to determine which stocks we should invest in as we continue to touch on various sectors. Thank you for watching, and if you'd like to chat with us or have any questions, you can follow us on Instagram, Facebook, and Twitter. Links are below. And as always, if you found this information useful, don't forget to smash that like button, subscribe to our channel, and set your alerts to receive more content like this one. See you guys on the next one, and remember to follow the 3 M's. Money makes money.